Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. It is time to begin this course on using the four pillars of cryptocurrency. And unlike most of the classes in the four pillars that I just record, this is actually, we have a live audience, a live studio audience. And I'll explain why we're doing it that way. But before we get going, let's just welcome everyone and make sure everyone can hear me. So if you can find that question box. Now, I don't know why they have both. They have a chat and a question box. They could probably answer that for me. I can't multitask. I'm just going to use the question box. So if you can hear me, type in where you're from in that question box, or say hello, and that way I know that that I'm being heard loud and clear. And we've got a lot of people. Oh, there we go. So we got Ohio in the house, and Texas, and Calgary, Canada, and Arizona. And Chris Richardson says, we do it live, man. And Os Sa says, hello, Andy. Uruguay. Federico Milongo from Uruguay. Crystal Hahn. Crystal Hahn's in the house, one of my dear friends. Oh, it's good to see. Oh, man. If we've got Crystal Hahn in the house, okay, that means we're really rolling here. In fact, Crystal, I got a special treat for you. Corey's with us. How you doing, Corey?
Hey, I'm doing great. Excited to be here. Hello, everyone.
We got New Zealand and Minneapolis and Ireland. We got Ben Thompson from Bountiful, Utah, just about a half hour north of where I live. So that's pretty cool. Kansas City, Fort Lauderdale, Toronto, Winnipeg, Scottsdale loves you. We love you too. Oh, and I got a little basketball. I don't know how they do the icons, but Laura gave me a basketball by my icon. Hey, if I don't shout out your name, it's because there's a zillion people as always. Big shout out to Corey from Chris Richardson. And Crystal knows how much I like exclamation marks, and she just buried the needle. So we're going to talk about cryptocurrency. You can see I only have 3 slides. No, I'm kidding. I've got others to do. And I'll just first congratulate you for attending. We invited, we're going to have so many people on this webinar because we invited, anyone that's in the 4 pillars really. And we're going to talk about how we apply this to crypto. And I just congratulate you for being here. We're going to learn some stuff, and those of you who've been in the 4 pillars, this will be way easy for you because you'll be like, oh, this is all review. We're just doing crypto instead of stocks, and that'll be easy. But we're going to do what? How many trades do you think, Corey? We're going to do long, short, covered call, cash covered put, and callers. That's 6. I can't, right?
Yeah, 6 trades, I think.
6 trades tonight, and so I don't know how long that'll take. I'll put Corey in charge of that, and then we'll go fast.
An hour each, I think. So plan on 6 hours. Hunker down, everybody.
Well, hopefully not that long. But the 4 pillars, we update that from time to time. And I did not trade a lot of crypto. First Bitcoin I bought was like $300 and forgot I had it. And then when it hit like $10,000 and got in the news, I told my wife, I go, honey, I think we got one of those somewhere, bought some. I looked up all these wallets that I'd opened trying to figure it out, and I found it actually. Wrote it up to 17,000, wrote it all the way back down to, I don't remember what it was, but I cashed in, bought some silver or gold or something with it. And then I got in a little later when it was more expensive. I'm kind of in and out. And the thing that's made me hesitant to trade crypto is it's just like trading a stock without a dividend, without options. It was really tough. And in recent months, and so I really didn't think about much doing a class on it. You still use the 4 pillars to trade it, but it wasn't as prominent. But once they started having different, I guess you call it a brokerage, that offered options on it, I was like, okay, now I feel much more comfortable. I can deal with the risk. Corey and I have not been, we don't get on the bandwagon on anything, do we, Corey? Is there any bandwagons you're on? Anything your way, like, oh, I'm on this bandwagon?
I don't think so. Just, I guess, financial education. Be educated about what you're trading. We're on that bandwagon. But yeah, we don't care. You can trade soybeans or copper or Bitcoin or whatever you want, but just know what you're doing for sure.
Well said, well said. So What happened is so many people were asking, what should I do with Bitcoin, Ethereum, crypto, and they were all on that bandwagon. And I said, well, I don't know that. I'm sure there's people that know more about crypto than me, but to me, it's just another chart, right? Just another chart. So I thought, let's do a webinar that showed a little bit about how crypto would work and see if people like to learn the 4 pillars through that lens. And like it buried the needle. Like everyone signed up for this thing, man. We had like a huge, like thousands of people. I says, well, what's the big deal? And then Corey had this awesome quote from Warren Buffett. Say it how you said it, because I probably would destroy it. About people, it gets at attention, going up or something like that.
Exactly right. People become interested in something because it's going up in value, not because they know anything about it, so it's not the knowledge they have. It's just people don't like to see others make money without them, right? And that's that greed factor. That's that the emotions in the market are very real. Greed and fear and those things are prevalent. So it's definitely a good quote to remember, that people are becoming more and more interested about crypto because its price is moving, and that's great if you know what you're doing. It's a problem if you don't.
For sure. And the education is the big part of this for sure. So what we're going to do is we're going to talk a little bit about the 4 pillars first. And this is really for people that are new. Like if you're already in the 4 pillars, you bought basically a course that helps you make decisions in mostly stocks and options. We have a little bit of real estate in there because, all these pillars fit real estate. But there wasn't a lot of crypto talked about it, simply because of how it was recorded. So this will be recorded, this webinar, and we're going to make it part of the 4 pillars permanently. So if this goes too long and you're like, okay, this is getting to be close to 6 hours, it's not going to be 6 hours. But if it is, don't worry about it. You can drop off, because this one will be part of the 4 pillars now. We're going to record it, and I don't know how my team does it, but they're going to insert it probably in the cash flow section. Or make it its own bonus video or whatever, so you can have it. So if you're new to 4 pillars and you said, yeah, I wanted to use these to trade crypto, well, you'll be able to use this to see how to translate that 4 pillars into this thing. But like Corey said, it's just another chart. I mean, what's the difference between, if I drew a chart, a stock chart, and this is probably going to be a train wreck, but if I just drew like a chart like this, well, what is this? It could be the average price of housing it could be a real estate chart. It could be orange juice, could be soybeans, could be Ethereum, could be Dogecoin, could be Apple, IBM, could be a stock. And so really all we're looking at is a chart and something going up and down at the end of the day. And I've just found that knowing the 4 pillars of investing and approaching it through that lens will be a big deal. So with that, is everybody ready to go? Type in a big yes if you are, and we'll hop this. Chris Richardson's awesome, man. That's right. Let's just hop in. Everybody ready to roll? Let's do it. Okay, here we go. So fundamental analysis. I like to say it's the study of the asset. And when you look at, or an entity might even be a better way to do it. And if we actually go into the first pillar class of the 4 pillars of investing, I'll bring up the actual slides here from the 4 pillars. Oh, I got to do my disclaimer. I forgot. I got to do that every time. So here's my disclaimer. Pull these lines off it. This is about education, not advice. This is going to be illustration. I mentioned we're going to do 6 trades here. So they're just illustrations. They're not recommendations. And hopefully you have a team that you can be more educated because you watch this, and ask your brokers or advisors or whoever's on your team better questions. And then, I'm in some trades. I can't warranty their success. They're looking pretty good right now, I got to confess, but they could turn on me. I could actually wind up losing money in these trades. In fact, a month from now, we'll know if I lost money, and we could go back and say, gee, look at the chart. Andy probably lost money in those. And that's fine. They're just for illustration. So I don't warranty stuff, because the defining characteristic of all these assets is no one knows where they're going to go for sure. Now we can guess and say, Bitcoin's cool. People like it. Seems to be going up. I've heard people say it's going to be $500,000 a coin, $1 million a coin. Well, I've also heard people say it's going to zero. So who's right? I don't know. But I do know I have my 4 pillars. Also, you guys know how I harp on this stuff. And I'm a little more casual. When I do a webinar and tell people, hey, come join the Cashflow Academy, I really don't do it that way. I say, don't join the Cashflow Academy if you're like this dude here. If he's got dreams of just cash, 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 and that's not the personality we tend to attract. And so all this stuff is, not representative. I hate phrases like this I often see because Corey, I don't think they represent the average person's experience.
Definitely not.
So this is more what I think is more prudent and resonates with intelligence. So guess what? I can kill this slide now. Gonk. We can get out of that. The biggest problem with, the big things fundamentals do is it's really the study of a stock chart. It's really what it is. And when you look at, at any entity, I often say this is a lot like a checkup. If I went to the doctor and they say there's just fundamental things that they'd want to check, numbers, and if all these numbers were really good, they say, he probably, going to live a long life. If all these numbers are really bad, they say, hey, this guy might be in trouble. Well, you could do the same thing with an entity like a business or a nonprofit or a government or a real estate project. And you say, hey, these 6 things, they really reveal a lot. So anything you want to say about fundamental analysis as far as a concept, Corey?
Yeah, I think that's a great approach to explaining this because it's just basically looking at the numbers and trying to identify whether that asset is, first of all, a good asset, right? Like, is this, whatever we're investing in, are we expecting their numbers to grow? And that's something that we emphasize is you can actually look those numbers up. You can say, are their revenues larger this year than they were last year? Are their earnings larger than, so I can just make a simple statement, okay, the company got better or the company got worse, right? It's pretty simple. Just like you could look at your household. You could say, well, did I make more money this year or less money?
Right.
Did I get better or worse in terms of income, in terms of my assets? So we can answer that part of it very simply. Is the company getting better or worse? Next question is, well, that doesn't mean that it's a good value to me, right? So the fundamentals are, first, what's the health of this entity? How well is it doing? The second thing is deciding on whether it's a good value, whether we should be getting into it or waiting until it's at a better price, and those sorts of analysis.
So, the 4 pillars help us do this. And when we look at, when we look at financial statements, we could do this on you as a person, and we could tell how strong or weak you are. We could do this on a corporation like a stock. We could do this on a sovereign individual. We probably couldn't do a real good fundamental analysis on gold because gold doesn't have an income expense asset. It's just a thing, right? So the 4 pillars investing is not about, it's about an entity, right? And so how does that relate to Bitcoin, right? Well, the 4 pillars of investing is we first start with your personal. So if you're new to the course, we're going to show you how to set goals for these numbers, and you'll be going through that. And the question in the assets is where does Bitcoin fit into that? It didn't fit into it a lot for me until they started being optionable. Okay, so that's going to be a big deal. And we'll also do about corporations, not a big deal for Bitcoin. We are going to do 3 corporations tonight that are related to Bitcoin, stocks in addition to our 6 trades. But this is a big one to do for Bitcoin and gold. And when you look at gold, and silver and platinum and Bitcoins and things like this, you're dealing with a currency, and that has a lot to do with, like in the United States, my home country, spending, taxes, and the value of your dollar. So if you come here to your 8 numbers that can change your life, and you say, look, what are my goals? Is it to change my net worth, to change my cash flow, to change my buying power, to preserve my assets? When we look at all the things you'll be learning in the 4 pillars, we'll say, hey, what is the role of Bitcoin in these things? And that's a huge deal. So let's go to crypto and look at it in this light. Let's see which one of these I can get up going here. cryptocurrency, this is a good one, is, one of the goals I have is to say, hey, how does this fit into the blueprint of my life, right? And Corey, we say there's three things to think about here. The first one is cash flow. Talk about what a cash flow asset is while I write all this stuff out.
Yeah, so cash flow is obviously something that is providing income maybe in addition to its value going up and down, which is capital gain. So when we think of cash flow, a great analogy would be real estate, right? If I own a rental property, now that's something that can cash flow. So I rent that out to other individuals. They get to live in my asset, but they have to pay me money for that. So every month they send me a rental, check, and that's cash flow, right? I go and I cash the check and I have more income, and now I can use that income in any way, shape, or form that I so choose. So cash flow is actually available on these cryptocurrencies now, and that was to your point, Andy. That used to not be the case. It used to be, well, you could just bet on it going up or down in value. Now there's opportunities to cash flow it along with its value changing.
You can also cash flow stock, like if you buy Coca-Cola and they sell some Coca-Cola, you can share in the profits with a dividend, okay? And with Bitcoin, one of the things we're going to do, I'm just going to put BTC, but you could do this with Ethereum as well, is you could actually, develop some new cash with something we call premium right here. And I'll just abbreviate, premium. And so that's going to be your cash flow. So when you look at what you're going for, if it's the generation of new money, then, selling options and different option strategies, and boy, you can go, some of you are more advanced students and you already know, even though you have just to put just a call and a long and a short position on those two, when you start combining those into 3 and 4 different investments that complement each other, you can do some pretty special stuff. We're not going to go that far on this because we're, building this to be a bonus or a good, video or a good class for the 4 pillars, but that's cash flow. Okay, Corey, talk to me about capital gain. I mean, let's put the house back in here and let's put the stock back in here and talk about capital gain a little bit.
Yeah, of course, their values can go up and down, right? And so when I buy a rental, I buy a house, I buy a stock, I buy, maybe even land would be a good example in real estate, because now you're not, if I just bought land, well, I'm not renting that out to anyone. So that would just be going up or down in value, right? A stock without a dividend, if I just sat there and held the stock, didn't do any options, didn't generate any of my own cash flow, I just bought the stock and held on for dear life, well, that's just pure capital gain. It's either going up or it's going down in value. And Bitcoin and Ethereum, that's how most people use crypto, is just, well, they're trying to make a cap gain. They hope that their timing is really good. They hope that they buy and sell at the right prices, and that's what they're hoping.
A lot of the time, like the advice people, they don't want to learn all this. And so they say, well, I just want to take a crypto class in 10 minutes and tell me what to buy. And should I buy it? Is it going up? If so, I'll buy it. And if it's going down, tell me and I'll sell it. And I'm going to time this. And this is the advice culture that we're like, no. So you're going to find that your 4 pillars helps you with this. And notice that here, when I invest for cash flow, because it brings in income, my cash flow changes. But when I invest for capital gains, you'll notice that the price of the house, like a house flipper cares about this. A guy who buys and sells the stock thinks of this. So what it's really about this, I'm going to show you. Let's say that I looked at it as an investment as a jack in the box, and I say, this jack in the box makes money. And my focus is really on this cash that it makes. So if this is like Coca-Cola or Bitcoin or whatever, how much cash can it actually create by what it does? Well, for Bitcoin, the answer is 0. So we have to have another way to do it. The capital gain people, they totally ignore. It's almost like there was no money coming out of it. They don't even care whether there's money coming out or not. What they care about is the price tag of this machine. And they say, hey, is the price going down or going up? So they're not really a business owner. They're more interested in the share of stock being sold, or the house being flipped, or the gold being sold. They want to buy the gold low and get rid of it. They want to buy the house low and then sell it high and get rid of it. They want to buy the stock low and then sell the stock and get rid of it. And they want to buy the Bitcoin low and sell the Bitcoin and get rid of it. And they want to buy the Ethereum low and sell it high and get rid of it. And they're just kind of buy low, sell high people. And that never keeps an asset solid in your asset column because you're constantly churning it into cash, right? We like the idea of building upon our assets, building and building and acquiring more and more and more, because that way you can have generational wealth. You can, work towards putting something in a trust and, have your family enjoy it when you're gone. Corey, talk a little bit about a hedge while I draw.
Yeah, so hedging is basically this teeter-totter effect where if we're worried about the value of some asset that we have on, we might want to put on a counterbalancing position in something else that kind of moves, generally speaking, inverse relationship. So if I'm worried, as in this hedge example, if I'm worried about the US dollar's value going down, I might believe that Bitcoin or gold or some asset on the other side would tend to go up in value if US dollars going down. And so as I'm worried about my US dollars and about how much money they're printing, whatever, I can put some of my money into Bitcoin or into gold or into some of these other assets that will tend to rise with a weaker dollar, that will tend to rise if there's a lack of confidence in fiat currency. Then maybe some of these other currency types, commodity currencies and so forth, would go up in value. So you're not even really trying to make money necessarily as much as you're trying to preserve wealth. You're trying to hedge off risks and maintain a certain level of value in whatever it is, if in your net worth, if that makes sense.
I might spend some money on a house on one side and hope the house goes up in value. And if it does, the money I have on my insurance policy will be lost, right? However, if my house catches on fire and goes down in value, I'm going to go to that insurance people and say, my insurance policy, I'm going to cash it in. It's worth, $1 million now, or whatever your house is worth. So that's kind of, I'm not trying to get ahead. I'm trying to preserve. This is defense over here. It's very much a defensive position, a conservative risk management position of defense and all this. So, one of my worries I have is, I will attract all kinds of students for different reasons. I've had real estate people say, I want to learn how to short the dollar with real estate. And I go, take the 4 pillars. You'll be smarter when you do it. Someone will say, hey, I want to buy some stocks and build a portfolio of dividends. I'll say, well, take the 4 pillars. You might be smarter at it. And I'll say, hey, someone says, I want to learn money and how to, effectively invest in crypto. I says, well, I don't know if I can guarantee any profits at all. I really can't. But if you take the 4 pillars, you understand this better. So what the 4 pillars is it is a financial education for investors. It's the foundation, regardless of what you want to trade. So I want to make this very clear. So everybody understand that the 4 pillars really wasn't designed to be a stock class, a real estate class, a business class, a gold class, or a Bitcoin class. It just covers all the bases. Does this make sense, everybody? And we just say hi to B. Chang, by the way. It's just pretty awesome. So does that make sense? Everybody understand that anything you're going to do, you want to do it in the context of building either cash flow, capital gain, or hedge, or a combination of those 3 things, and you'll be more successful. So type in a yes if you get that, and that helps me know that I was clear on what I said. So that is fundamental analysis, okay? And we're going to do a lot of fundamental analysis for crypto. Would be what? Well, it would be on the US of A. It would be on the dollar or on a currency. We would want to look at maybe the US dollar right here and say, okay, what's their income? Well, it's $7 trillion. There's a lot of red on this one. What's their, or excuse me,
actually,
$4 trillion. And then what's their spending? $7 trillion for a $3 trillion deficit, 28 trillion on what they owe and 160 trillion on what they promised, almost 200 trillion. We're going to be at 200 trillion right now. We're about a 188. And, it's pretty scary for the US dollar. So someone says, well, if I go to my own financial statement and I say, well, I have some cash in here, I'm nervous it would go down. Maybe someone thinks that a Bitcoin or some gold or whatever could counteract that. And that's quite possible to start with a hedging position on this. Quite possible. That's, one of my guys that I hang out with a lot is Robert Kiyosaki. He really is a fan of Bitcoin. He believes that could be. I also have some gold to do this. I don't know if I'm right, but I like having a balance of this type of stuff. If we deflate, this would probably happen, right? If we deflate, your cash would get more valuable. So a lot of this has to do with inflation and deflation, right? The value of currency has to do with inflation or deflation. And so this is very important about how we're going to position ourselves, and is cryptocurrency a tool to help us with that? Now, the second is technical analysis. So that's enough for fundamentals. Anything more on fundamentals? Okay, this is pretty cool. Greg Miller says, where's the chat option? Dude, I apologize, Greg, man. I'm a moron. I never use the chat here, very rarely. Mike Dennison sometimes will pop in and use the chat when he talks to us, but I just use the question box. So if you have a question, Greg, I can get it right there, buddy, because I can see you. What is the chat options? So let's get rid of fundamentals and just say, enjoy that section. It's life-changing. And I'll just say, you'll not only trade crypto better, I think you have a chance to trade everything better, and invest better simply on that. Now let's take a look at technical analysis here. Do I have a technical analysis deal up here? I think I do. There's my cash flow pillar. Got so many slides here. It looks like this is probably my technical analysis. And what technical analysis is looking at the charts. And obviously crypto has a lot of charts to it. And so we'll be talking about patterns. Now you're not going to see here, is this a stock? Is this a real estate? Is this gold? Is this soybean? Is this over? So just because I don't mention crypto specifically, just know that this works with everything. As a matter of fact, if I were to bring up some charts, and maybe I could do this, let's bring up the Mentor Club maybe offline over here on this other screen. We can just look at a whole bunch of different charts quickly, okay? Anything you want to say about like technical analysis being a measurement of the, like if fundamentals is a measurement of the entity, technicals is a measurement of the emotions that investors have towards that entity. Is that fair enough to say? Because the price tells you how people feel about it.
Exactly. And it's really looking at supply and demand of just, hey, buyers and sellers, right? Is the price under demand? Is it going up? Or it's sellers coming in and pushing it down? And so one way you might think about that is to kind of use an analogy is maybe say, if we were looking at a retail company, fundamentals would be going in the retail shop and saying, well, how much inventory do you have? Let's add up all these dollars and cents, how much, looking at all the numbers. And then technicals would just be basically standing outside the store and watching whether people were going in or not, right? If tons of people are flowing in, then you're like, well, this thing is under demand, right? If there's nobody showing up, then we'd say, well, it's pretty empty. I'd want to sell that, So kind of with charts, it works the same way. Is this thing under demand? Well, what do you see when you just first pull up a chart? If its price is going up, it's under demand, right? More buyers than sellers. Keep it pretty simple because you don't need to overthink it. One of the first things you'll learn in charting is the trend is your friend. So First question, who has control, buyers or sellers? Is it demand or supply? Well, that right there tells a story. There's more demand than supply.
Yeah, so when we have an uptrend, see how we have a lower, let's go one more here. See how we have a lower, like an uptrend as opposed to double top. Here we have a higher low, and here we've made a higher swing high. And so the thing I worry a little bit is if someone came to the Four Pillars and said, I want to trade crypto, and you see me talking about this, they say, well, this looks like a stock chart. Well, guess what? Let's see if we can find this exact thing here. Oh, in fact, let's just look at this right here, this area. I'll just pull an area up here, and it just happens all of the freaking time. It doesn't matter what you're trading. Let's get a drawing tool. It's an arrow here. Let's just start with this right here. Is right here you have the exact same thing. Let's get rid of all this standard deviation stuff and this fancy stuff, and let's get rid of, well, I could almost put these lines on. I didn't plan this, but you can almost put these lines like right on, where they need to go, right? As far as I could put, if I get my drawing tools out here, watch this, boom, boom. So I could go and say, look, here I have where they said yes, they came up, they said no, they came back, they said yes at a higher place, and boom, through. Well, you can see that right here, right? They said yes right here, they came down, or they said no right here, they said yes right here, they broke through and got a higher one. They came back, the old resistance turned into new support, and then it goes up higher. So the same charting techniques are here, and there's all kinds of there's double tops, there's head and shoulders, there's lots of different types of chart patterns. In fact, if you look at the many different chart patterns you'll be learning in the 4 pillars, like we have a head and shoulders right here where we have a higher high, but then we come back and we fail to break that higher high, and that can often be a sign of reversal. And so here you got the same thing. You have a head and shoulders, if I can draw it, right here on Bitcoin. I mean, there it is. Whoop, there's the head and shoulders right there. And, we had a change in the trend for a while right there. So just to let everyone know that the things you'll be learning in the 4 pillars apply to any. Now watch this. Give me something to put in there, Corey. It's not just Bitcoin. I mean, we could do like, I don't know, we could do like oil, and we would see the same types of higher highs and higher lows in oil. We could put in wheat. What's wheat? I can't remember the symbol. Is it Z something?
ZW, I think.
Is it Z? I don't think that's it. Is it? Yeah, it is. It's wheat. Here we see a double bottom right here, right? And kind of an ascending triangle right here where we have a lower or a higher low right here. And now we have a higher high. This is inflation, by the way, guys. Look at the price of wheat, Corey.
Yeah, and look at the
inflation. Look at this. From 600 to 800. Oh, there's no inflation. So we look at these charts and I say, gee, maybe I do want a Bitcoin if my US dollar is only, like, let's watch this. If the US, let me show you how the hedge might work and how this might apply here. Let's do 2 charts next to each other. Let's put a Bitcoin in here, BTC. And what's interesting is if my US dollar buys $600 worth of wheat here, and now for the same amount of wheat, I got to pay 800. Well, maybe it would be nice to, instead of have $1, to have something that keeps pace with that, because see now, well, yeah, the Bitcoin, if I hold my Bitcoin, it's even worth more if I held it, where my dollar now doesn't buy as much wheat here. Well, my Bitcoin would. So if I was using Bitcoin to buy wheat here, well, that'd be really great. But if I'm using Bitcoin to buy wheat here, well, that'd be even better. And so does that make sense to everybody? That the charts really help us. And, we could even do, we could do real estate in this. We could say, well, how's the IYR, the real estate trust, right, in here? And how's it doing? Are we having inflation in this current period? Yeah, I'd say that's pretty inflationary, and the real estate prices must be going up here. Maybe I say, what about Apple? What about stocks? And whoop, I typed that in wrong. AAPL. I'll get it right, folks. I'll tell you. AAPL. Is it? What's leading? And so just understand that the technical analysis we teach is not labeled as to whether this is gold or silver or orange juice or wheat or whatever, but these chart patterns will be very helpful in especially if a person wants to just buy low, sell high, try to do the trade thing. I think Noah is probably the best of the 3 of us, Noah Davidson, on those. But I don't mind trading sometimes. It's fun. It's not my core strategy. but this really helps me knowing when I want to get anything out. Anything you want to say about technical analysis as it relates, because someone say, well, I thought, I was getting into a real estate class and I was interested in the real estate stuff. Well, we got it. It's here. Well, I wanted a stock class. Oh, we got it. I want commodities. We got it. I want Bitcoin. We got it. So can you guys see that the 4 pillars apply to this? Dude, Chris Richardson needs to join us on this show because he's freaking killing me right now. Did you see his comment?
That's funny.
Like, Andy, it's kind of like dojis, man. Like, I talk about the doji this way. Do you guys remember the doji stuff? Like right here, where Jerry Seinfeld, it's kind of like your love life. Like Chris Richardson, he says, this is my love life. They're saying yes, and they're saying, where is it? They're saying yes and no and yes and no and yes and no. It is a lot like the love life. I mean, I don't know. We probably can't hear this. Let's see if we can do it. Remember this? Hang on. Remember this? I don't know if it's even got. No, it's not loud enough. It's not working. Maybe it is.
The man hands episode.
It's the man hands episode, right? Yes. Cute. That's like my hand, okay? That's my hand. So, wow, she's cute. Same hobby, sense of humor. Oh my gosh, we got man hands. And then when the relationship dies, you say, well, well, it all started when I, saw she had man hands. That's when I met her family. That's when it started going downhill. So we're going to have candles, and you'll notice that whether you're Apple, Bitcoin, or you have candles, and so use your stuff, right? Very, very, very important, okay? So not a big deal. Now, this is important because if you're invited here, you're already in the 4 pillars, I'm assuming. And there's nothing, like we don't have anything for sale tonight, right? This is going to go into the 4 pillar stuff. So if you're already in here, make sure you get in. And if you're going to trade Bitcoin, make sure that you're sharp in these skills. So that's technical analysis. So anything you want to say about that, Corey?
No, I think that's great.
Technicals. Now let's talk about cash flow. And this is where we're going to bring up a different account. And this is important to notice right here, okay? Important to notice. Here we have a simulated trading account, which means we could go in here and, we could trade all of this stuff. And this is all virtual, right? So, if you make a lot of money in your virtual account, don't get too excited because you can use that to go buy a virtual Mercedes and take a virtual vacation. But if you have a nasty bad number here, know that that's just virtual too. So this is the best place. Now, I'll be frank, I haven't found a great place. And if you guys know of some, great. But crypto, for better or for worse, and I think it's probably for worse, I haven't found a lot of good places to trade crypto. So I went and bought a Bitcoin for like 50 grand, and I bought an Ethereum for like 4 grand or whatever it was, 3,500, I think it was. I'm just going to trade it for real. I don't think you should practice. If you're starting off, you probably don't want, $50,000, $60,000 practicing. I don't care how rich you are. Probably not a good idea. But I did it because, I needed something to teach from. So no big deal. So this is called LedgerX, and they've just changed their name. They were bought by this FTX US Derivatives. They just merged recently. But there's Deribit, and Coinbase lets you trade it, but not with options yet. And we're going to show you that the spreads aren't the best, and it's still in its infancy. But this is the one I use. Now, here's the good news. These are done in contracts of 1/100th of a Bitcoin. So you can see that this guy did one, like this is the trades that have happened. And this guy did 100 of these, right? 100 of these. And so, this represents a call on 1 Bitcoin, right? And you can see right here, this guy has 100 contracts on the bid side. So that's 1 Bitcoin. And this guy has 1,000 on this side. That's 10 Bitcoins. And so it's not really liquid. Why would you put 25 Bitcoins in here if you couldn't liquidate 25 Bitcoins? But this will grow, in my opinion, because this is exactly the same thing that happened to the options market when we started. So let's look at this. And when you look at cash flow, let me find my 4 pillars for my cash flow. When you look at this, I probably need to add one here to our numbers. So should we add one, Corey? I think I wonder if I could do.
You could add one or put it in the currency column, or yeah.
I'm going to try and find my crypto. I got like 200 PowerPoints open here. This is brutal. So let's take our crypto coin, doink, wham, copy, bam. Let's just add it to the list of stuff we could trade. What do we want to put in here as we go? This is looking pretty nice, right? I like this. So we could come out here and we could say what? Crypto. C-R-Y-P-T-O, crypto, right there. That's probably not even spelled right, but we'll take it. And so when we look at what we want to buy, and what our positions are going to be, again, I said there's income, which is cash flow, capital gain, and hedging, just like we talked about at the top of the program. And we're going to use the technical analysis skills to actually start to create some cash flow from this. So the first one we're going to do that's pretty easy is just a long position. So Corey, what's a long? And let's write down the 6 that we want to do here. We'll do like maybe 8. First is we can have a long position. Second, we can have a short position, and cash flow is about position. Cash flow is you do your fundamental in that position. You do your fundamental analysis, you do technical analysis. What is the entity? What is the currency? What does the number say? What does the chart say? And then you say, okay, how am I going to position myself to benefit? Okay, very simple in the third pillar. We're going to do a covered call. If I can write that right, we're going to do a covered call. And tonight we're going to do a cash covered put. So we'll just call it, well, it's really covered, but we'll call it a naked put. We'll cover it with cash, but we'll say a naked put, or sometimes called a short put. And then we're going to do a protective put to protect. And I don't even have one of those on here, so I'll show you how to do that. If I wanted one, I may execute it, I may not, we'll look. And then number 6, we're going to do what's called a caller, which is no big deal. And then number 7, we'll do 2 bonus mystery trades on some 3-dimensional thinking that I think is pretty smart. If you've been in the Meta Club, you might even know what these are already. So let's take a picture of that, Corey. So I have it. We'll just check these off, one at a time. And these are the positions you can learn in the 4 pillars cash flow section, and we're going to apply them to Bitcoin. So Corey, talk about a long position, right?
Yeah, so long position means that you're betting on its value going up. Anytime you're long something, you're a buyer. And when you buy something, you're trying to buy low and sell high, right? So long Bitcoin, long Ethereum means that you're actually buying the coins and betting on their value to rise. So if we wanted to buy Bitcoin like you were talking about before, we'd need to buy 100 to equal 1 full Bitcoin. But the nice thing about this is if you didn't have the 65 grand that 1 full Bitcoin would be, you could buy any fraction that you wanted, right? If we wanted to buy 1/100th of a Bitcoin, well, then it would only cost us $657 or whatever it is. It'd be 1/100th of the price of the full Bitcoin.
So this would be only 2 of the 3 opportunities. If we did this, whether it's gold or cash or whatever, we certainly could put a Bitcoin here, couldn't we? We could replace that for BTC. Gold and Bitcoin act the same way. We say, look, if our cash goes down, the value of our Bitcoin goes up, and be done. And that is one thing where you're just, there's risk involved. I mean, if Bitcoin goes down, then you're going to lose money in it. Now, I'm going to just show you how I picture gold, and Bitcoin is the same way. I'm not really into trading physical gold. I'll trade the paper asset, I'll trade the ETFs, but I'm not going to trade physical gold. Physical gold to me is the same as my insurance. I hope I never cash in my life insurance. I hope I never cash in my home insurance. I hope I never have to call State Farm and say, hey, we've wrecked a car. I hope I lose the money that I buy an insurance. Isn't that weird? I hope I never benefit from my insurance money. I hope I never have to get a benefit, because if I get a benefit, that means something bad happened. So when I buy a bar of gold and I take it at some place and say, hey, store this for me in my name, I probably will never see it again if things go well. I'll never see it again. I'll never see that money again. And I stick it in there, and if I see the dollar just goes to pot, and I have to go and cash in that insurance policy and say, well, now I got to use my gold, it's because the dollar wasn't worth anything. And the same is true, with my opinion, in the Bitcoins and Ethereum coins that I buy. Is I say, I'm going to put a little money in here and act as a hedge. Okay. What I don't do is do it for capital gain, but I'm going to show you how it might be done if you wanted to. Is you could say, hey, I'm hoping that I buy my Bitcoin right here, and then it goes up and I can buy low and I can sell high. That's what I'm hoping that I can do. Now, I don't do a lot of that, but some people like to. And these are the two opportunities. If you have Bitcoin, your net worth could be maintained if you throw some cash in there next to it, or your net worth could go up if the Bitcoin went up. Well, in this cash flow section, we learn a little bit about, how to set those types of things up. Let me get my pointer in right here. Where really, when we buy something, we do it this way. We have an entry. Okay, so we do our fundamental analysis and all this, and then we say, okay, opening a long position, this could be a stock, a Bitcoin, whatever, is we're going to have, basically this right here. We're going to say, look, whatever it is, stock, Bitcoin, house, whatever, we have a place where we enter. We have a target that we think it could get to. We have an exit that we say we're not going to let it fall more than that, and we're hoping for a reward that's twice as big as our risk, and we live with it. Okay, and that's why I don't like to do this as much, because even though the reward's higher than the risk, there's still an opportunity to lose here if we're not using options, and even with options we could lose. But can everybody see how, this could be a stock, this could be gold, this could be anything, including a crypto? Does everybody see that? And if a person just goes blindly into Bitcoin or Ethereum or Dogecoin or whatever coin they want to trade, and they don't have this, they're not trading with with the most basic trader education that they could trade with. So should we do one? Okay, this is cool stuff. Okay, very, very cool. Very, very cool. Okay, awesome stuff. Okay, awesome stuff. And someone came in late and said, hey, is this going to be replayed? Yeah, we're going to be replaying, so no problem. This is going to be inserted in. Okay, beautiful. So, Corey, should we do one? Should we do a long one here real quick?
Let's do it.
Okay, so here we go. Well, let's just do it on this. We could do it on this chart. Let's find a chart and bring up the Bitcoin futures, which is going to be, we just need one chart here. Boink. And let's go /BTC, and let's just decide what we might be. And we're going to look at any patterns. Let's get rid of, say, the standard deviation stuff for now. Well, we can leave it on there. I mean, what do you think? This is a big cup with a little handle. Would you agree?
Correct.
So if we go back to our technical analysis patterns, and this is why you're in the Mentor Club, to get practice with this. Where's my, I got to move this out of the road so I can see. Technical analysis. When I look at all the patterns that we talk about and we learn in here, there's all kinds of them. And one of the things we can see, uptrends, is this cup and handle. And a cup and handle is when you have a kind of a straight line across the top, and you have a valley and then a higher low. So it's not quite an uptrend yet, right? An uptrend would have a valley that is higher than the previous low and another peak that's higher than the previous low. A cup and handle is not quite there yet. It's still bullish, but it's not quite there yet. So if we look at this and kind of picture this in our mind, we could draw this and say, well, this is a big one. This is a big cup and a little handle, just like that. I think that'd be fair. Most people say, yeah, that can be a nice cup and handle. So
yeah, and a lot of times, Andy, those kind of look like ascending triangles. Like you could almost drag the line under the lows and then drag your line across the highs, kind of do an ascending triangle, because the cup and handle and the ascending triangle will be kind of similar that way, where you have kind of the rising lows upward and the resistance along the top.
So we're definitely in an uptrend. There's no question. If we draw a trend line, that's an uptrend right here. And how we might look, is we might connect these dots and say, hey, we could see this being within a standard deviation. We could certainly visualize that and say, here's my target. Maybe I say, I think another way you could do it is see how far it's had spurts and measure those spurts from bottom to top or from top to a bottom and see how big those are and say, okay, let's draw one the same size and say, we think it could get out here, and standard deviation says maybe, these have been extraordinarily big. So maybe we say, hey, somewhere around in this ballpark, we think that's a realistic move that it could make. So we want to make sure that we put an exit below that. So watch. Here we're going to have our entry. Let's just buy it today. Okay, we'll buy it today at 65,000 or whatever it is. And we say, we think that target, if we go up this high and look at the trend, maybe we can even draw one like this. We say, look, we think it could get to maybe 80 in 2 months, right? Probably won't make it this month, but 80 in 2 months. And so we say our target is 80K. That'll be our target. Okay, great. We think it can hit there. And then we say, yeah, but if we're wrong, where would we exit? Well, we know that often it will bounce off support like it did here. See how it bounces off support? And the old resistance can become support. So maybe we take this old resistance and this support and we say, you know what, if we're wrong and it goes a little bit below that, that might be our exit right there, a little bit below that, and say, look, if it gets to 55, we're out. That way, we've got an upside that's really, really big, $25,000, and a downside that might be like 10, maybe 10,000. And we get our risk to reward ratio right there. So that might be an example of how someone might, trade it if they wanted to play that game. That way, if it rolls, they were in it. And by the way, they don't have to sell at the target. They can just say, oh, at my target. Now let's, maybe move my exit up here and let it go further, and move my exit up here and let it go further, move my exit up here and let it go further. They could play that game. But we do want a line in the sand that if it does drop, we don't have a massive loss and a massive risk. So you'll learn more about this as you get into it. And if you haven't taken your 4 pillars in a while, that's fine. Beautiful, fantastic. And off we go. But the bigger point is all of this stuff applies. And whatever stock this is, who knows? It's just a sharp, this could be gold. There's your ascending triangle, Corey. There's your trend, right? All this type of stuff. Any final thoughts on that?
Yeah, maybe just show them real quick how easy it is on your LedgerX platform if you were just going to go long. Just, hey, here's how we could buy Bitcoin or Ethereum. Pull up one of them maybe.
Yeah, if we wanted to just, it says buy or sell Bitcoin, okay? And all I would do right here is I'd say, all right, I want to do 100 contracts. That would be equal to what? 1 Bitcoin. See that? If I said, okay, I just want to do 10, well, that'd be equal to what? 1/10 of a Bitcoin. Let's say I just want to do 1 contract. That would be equal to 1/100th of a Bitcoin, right? So you could literally come in here and do it for 1/100th of Bitcoin and say, okay, I want to buy that long right here. And I want to buy it, and I can go, right here we have 65,000 and almost 66. So I would try to get it somewhere between. We call that splitting the spread. This guy, I could get it right now, for this guy's asking 65, 910, 930. I get it right now if I pay that much. This guy's holding out for less. So the game usually is you bid something in the middle. You can see these changing as people are, buying and selling. But Corey, what would be a good split of that spread? Maybe 65,
80, yeah, 65, 800, something.
So I type in 65, 800, and you can see that since that's only 1/100th, that's only going to cost me $658. It's not going to cost me 65,000. It's just that's what 1 Bitcoin would be. Since I'm only doing 1 contract, it's only 658. Now, this would take 24 hours to go through. And that's one of the reasons they use so much Tether. You know, trading cash to Bitcoin can be really, really slow. This is a 24-hour contract. If I make some ridiculous offer that wouldn't be taken, say, yeah, I'm willing to buy it at, 50,000, right? Something like that. I'd be clear down here. They'd almost laugh me out of the room because no one's going to sell it for that small amount. But even if they did, I wouldn't get it till tomorrow. Okay, so we'll go 65,800, and then if I hit buy long, it's gonna ask me to confirm it. And it's one more shot to make sure that's what I want to do. And if I say yeah, I want to do it, then you would see me go into this. Okay, I don't want to do it for 65,800. I've got one Bitcoin already, so I'm just going to leave it there. But that's how you would do it.
Yeah. So what you're saying there is that settlement takes 24 hours. So if your execution went through and you actually bought it, it would take 24 hours for the actual settlement of that.
Now, what I would actually do here is, here's your problem. I would probably leg into this, okay? The problem you have is I can't predict that this isn't going to be a breakout right here, okay? And so I really like buying a breakout, where the candle on this type of a thing, like I had one question that says, wouldn't you wait for it to come down at support? Well, I don't know it's going to do that. And you can buy off support, but you can also buy the breakout. And where I'd really buy it is the breakout, which it's close. Noah Davidson would just say, hey, I'll buy right now and manage the risk and the downside. If I wanted to do something at support down here, like 40,000, we'll talk about selling a put that makes me promise if it goes down and get paid. But if I'm really worried about taking off without me, I'm going to buy this breakout. I'm not going to wait till it comes back down there because it may never happen. So all kinds of different things. But if you just apply what you learn in your 4 Pillars course and just understand you can do it with Bitcoin just as well, you're going to be in good shape. So, review that, look at that, go through that, and you should be good. Should we do short?
Yeah, so shorting the Bitcoin or Ethereum or a contract, when you're short something, you're basically borrowing to sell. And so we won't go through all the mechanics of it, but when you basically sell short, you're saying, okay, let me borrow this asset and sell it in the open market for current prices because I think I'm going to be able to buy it back later for less. Right? So you're willing to borrow. It's kind of like going in, say you see something, selling for $50 and you know that you can go borrow it somewhere else and sell it at 50, and then you think you can replace it for $20 and go pay that back. Well, you'd make $30, right? It's kind of that concept of I'm betting that the price is going to go down when I short something. So always remember, if I'm long, I want its value to go up, but when I'm short anything, if I short an option, if I short Bitcoin itself, if I short a stock, I want its value to go down because I have to buy it back. I have to repay what I borrowed, and I need to buy it back later for less in order to make money. So it's a dangerous, everyone considers shorting much more dangerous than going long because
you go to infinity on the way up.
Exactly. There's no limit on how much you could theoretically lose being short, right? If I buy something for $100, what's the worst that can happen? Goes to zero. I'm out $100. If it goes up to 200, I just lost 100. If it goes to 300, I lost 200. If it goes to 400, I lost 300. So on and on it goes. There's no limitation. So getting short bets on the value going down, but there is unlimited risk, so it's considered a much higher risk game.
We'll talk about the chart and putting the technical analysis tool into that and the risk management and exit as well. But if I think it is going down and they say, oh, China's going to ban it, or Salvador's wrong, or they come out with a new technology because of obsolescence risk, whatever. If I bet it's going to, if I'm going to bet it's going to go down instead of buying it, I want to borrow it. So I borrow 1 Bitcoin right here. and I trade it for $65,000. So I sell it. In other words, I borrow 1 Bitcoin, I sell the Bitcoin, I get 65. I still owe the Ledger X. I still owe these guys one Bitcoin. As it goes down, let's say it hits 50. Well, that's awesome. I can now buy it back. So look at this. I got $65,000 in here. I can buy it back for 50. That'll leave me 15 grand left over, right? And then I could return this 1 Bitcoin, so I don't owe them anything anymore, and I'm left with 15,000, right? And so that's pretty cool. What you'd want to do is you'd say, here's my entry at 65, here's my target at 50, but maybe I set an exit at 70. Exit. I set an exit 70, so I have a huge reward, small risk. This would be critical to have the exit if you wanted to trade it this way. And we would look in as far as from the 4 pillar standpoint would go. We would really look for a bearish pattern and fundamentals that would suggest the dollar is going to get stronger, right, Corey?
Exactly right, because you're still trying to buy low and sell high, but you're doing it in reverse order. So you're selling when something is high or likely to go down from its current level, right? I'm going to sell it here, and then I'm going to buy it back cheaper down the road, and I'm going to make money accordingly. So bearish chart patterns would basically be, oh, this looks like it's going to fall. The price is going to go down. I'm going to bet on it going down. So I would look for those bearish setups, descending triangles, downward trends, bear channel is down there, falling wedge is down there on the bottom. Those would be more of the bearish setups.
Maybe I short. These would be more of the bullish types of stuff. So what's cool is this applies to, whatever. And if you're into crypto, then just pay attention to this type of stuff as you go through it, because it's going to apply. It's going to apply just fine. Okay, long and short. Let's see what we have next. We have the covered call. Now, we talked about, let me find my cash flow one. Let's see, we got here, crypto, let me go down here and get it. So let's look at our cash flow. Again, this is cash flow. And in here it said, let's go back up if I can find it quick, that we have the hedging, which we buy some Bitcoin to hedge. We have the long and short for the capital gain. How do we get some Bitcoin in here or some Ethereum, right? Maybe if we get some Ethereum. And how do we cash flow? Well, we could get a premium by selling an option on it. We get a premium for selling an option on it. So let's do that. And we've done that here with Bitcoin and Ethereum, actually. So we'll show both those examples again to review. And let's draw a financial statement this time. And instead of just having a hedge or my net worth going up and down, let's actually develop some cash flow in this in a very, I don't know if trading crypto is ever conservative, but we want to have an arrow going up here where wherever we buy can still go up and down. But we want new money created, new cash created. So let's start with a Bitcoin here. And let's see what we can do. Well, here I have this Bitcoin. Here's Andy. Just put an A by his name right here. And let's say Corey is over here. And I say, Corey, you might not want to spend $65,000 on a Bitcoin, and you might think it's going to like $120,000. You might be one of these people that, Bitcoin's the greatest thing in the world, and it's all about Bitcoin. It's going to $1 million, and it'll probably be 100 grand by the end of the week. But you really don't want to risk $65,000 for a month to see if it's going to go that high, right? You don't want to risk 65,000. You might want to risk less. So if you wanted to risk, say, 2,300 and get the same upside benefit as you would, 65,000, how would you buy a call, and why would you want to buy a call?
Yeah, so that puts me in the speculator seat, right? I'm going to take the low probability angle where I say, well, I'm going to take a lottery ticket type of situation. Well, probably not that bad, but basically a low probability, but it doesn't cost me a lot of money in comparison. I'm looking at it, I'm a cheapskate, $65,000 for one full Bitcoin, I'll pay a small fraction of that to speculate on its upside, which, by the way, would be a good trade if the price exploded. But you might ask yourself, well, how probable is that? Not very likely, right? But that's why I have a huge payday if it happens. So my position is one where I'm risking less money because I'm only putting $2,000 into the trade instead of $65,000. But I need a really, really big move in order to be successful.
Let's draw a couple of risk graphs on that just for fun. If you bought here, let's just put this, I wonder why that's giving me so much grief. I'm getting all kinds of static from this. I'm going to take off my, get rid of my ink here.
Somebody's trying to break into your wallet right now, your Bitcoin.
Yeah, you got some crypto thief, you know.
We'll show you protective puts here in a second.
Yeah, exactly. Let's draw that again. Let's look at the two financial statements, and this might be fun. Let's say that I have a Bitcoin in here, and I said we're only going to do 6 trades. We're actually going to do 8. I forgot about long call and one put. So we'll show you the advantages on both sides of this and why this might be cool, and then you get to choose which side you want to be on, okay? So let's say on this side, I have a little risk graph that looks like this, and this is 0 money made, and this is, you know, happy plus I'm making and minus I'm losing. And I just start here at, let's say, $65,000. And let's say this is 70,000. Let's say this is like 80,000. This is like 100,000 out here. Maybe this is 50,000, whatever it is, 50K. And if I buy at 65 and I own this, my risk graph is going to look like this. It's going to go down if I lose a bunch, and it's going to go up if it goes. So, you know, by buying it, that's a pretty cool risk graph to have by being long. Now, the other part of this is Corey's over here. And I've put $65,000 is what my Bitcoin is at right here. Let's just pretend it's, you know, 65 grand is what I spent for it today if I bought it today. And Corey says to himself, I don't want to do that. I want to buy an option. Let's say that for $2,300, he could have the option to buy or the choice to buy at like 80. Okay, so now we'd have 65, let's put 50 in here. We'd have 75, we'd have 80, we'd have 95,000, 100. And, you know, here he'd make some money and here he'd lose. Well, you know, let's do this risk graph right here, Corey. Let's put in.
So if it was,
your break even would be 80.
So, well, it would be even a little bit above that, but basically 80 and below, I have max loss, right? So if it finishes at 80 and below,
right here,
I'm right there at a max loser of $2,300.
Right.
Because that's what I paid for that option. So when you buy,
this point would be 82.23 right here would be that
82,300. Yep, 82,300. Perfect. And then looking at this, I'd get unlimited profit up above that, but it would have to move an enormous amount. You can see Bitcoin's way down there at 65,000. So if somebody said, well, how likely is Corey to make money? Not very likely, because this thing's got to go up by over 15 grand just to get to my break evens at expiration. So it's got to be well above that. But if it had this gigantic move, you know, if it went to 100, if it went to 115 in this period of time, I'd make a killing. I mean, let's just throw out a number. Let's say that Bitcoin went to 100,000. If it went to 100,000, what would I make? Well, I now have the choice to buy the Bitcoin for 80, and it's worth 100. So I make 20 grand minus my 2,300 premium. So now you're seeing the big payoff potential. 17,700 would be my profit if it got up there to 100 grand, right?
That's quite a return on $2,300, you lottery boy.
Yeah. Now, now again, not likely to
long
happen,
shot.
but you can at least appreciate what the person's philosophy and thesis was, right? You can at least appreciate that, well, if they were speculating and they thought that this was one of those situations where Bitcoin was going to go wild and crazy to the upside, they could get a bigger bang for their buck by being leveraged in that manner, putting 2,300 bucks in to make 17 grand. Now, again,
So
not
they're going to
probable,
spend
but
20.
good
They,
risk
yeah,
to
they're going
reward.
to spend $2,300 to get the choice to buy at 80,000, and it's not likely to get there. But you can see why people would. God, the most I can lose, even if it goes to zero, is only $2,300. But if it does go through the roof, 2,300 turns into 70 grand. I like that. This would be a long call because we own the call. We bought a call from someone. Now, this is interesting because over here, if it dropped to 50, I'd lose $15,000 over here. I would lose 15 grand over here because I own it. Let's say I bought it at 65 and it goes down to 50. Now I've lost 15 grand. And if it went to 20, I'd lose more. And if it went to 10, if it went to zero, I'd lose it all. This guy has a max loss of 2,300 because he doesn't have to buy it at 80. If it goes down, he says, oh, I'm not buying it at all. And you only lose your premium. So what we can do is you can be the buyer of this and have a risk graph that looks like this, or you can have a seller of this. In fact, we could say, hey, you give me that $2,300 and I'll be the guy that makes you that promise. And what will happen is now I go to 80 here, right? Plus $2,300. So I go to 82 or 80 right here, and that would cap my gain.
Yep.
So where here, I basically take that upside that used to be infinity at 80 and I give it to this guy. I give him my upside from 80 and above, but he has to give me $2,300 for it, which means if it goes at 80 or above, I would make 65 to 80, which is 15
grand.
plus this, and I would make 17 grand on this side, really. And then he would make everything beyond that if it got to 100. And so I'm basically selling him this portion of the upside, and he's got to wait, for it to go to 65 to 80 before he starts making money. I have to go to 65 to 80 before I stop making money. And so this is called a covered call. So we just did long, short, long call, and this is called a covered call. And the reason it's called a covered call is I have the Bitcoin to keep the promise. If it does go up above 80, I have to sell it to him. So we don't need to go through the details of covered calls right now. What's more important is if you should really practice with stock first. If it were me, I would not write, and this is really important for Bitcoin traders, I think. It's just my opinion. You can do whatever you want. But I would really recommend coming and doing something similar or easier, like go find AT&T, which is $25, right? And go into their option chain. Let's see if I can find it. Go into their option chain and write some covered calls here for a couple bucks instead of 2,300.
Oh, it looks like it didn't change the symbol, but anyway.
Yeah. Let's see, because it's not even gonna be that much. Write a covered call for 21 cents and do it off, do it cheap. Before you do 80 grand, 60 grand and $2,300, do 25 bucks and 21 cents in a fake account and see how the mechanics of it work. Is that good counsel? You decide. But that's really, really cool stuff. Okay.
And it is kind of neat on the crypto side that you don't have to have 100. Right, with stock, I would have to own 100 shares to cover my call. Well,
yeah.
on the crypto side, it is kind of nice that I could go buy 1/100th of Bitcoin, and I could still go sell one 1/100th call option against it. So I could actually do a covered call on just 1/100th. Where we can't do that with stock. So that is kind of a neat little feature of the crypto side, I guess.
Now, let me tell you, this is important. Let's do like an Apple, okay? And let's say I come into Apple here, and you're going to see something sort of interesting. Apple right now is trading at $150 a share, $149.99. So it's come down to $150. And you can see the difference between the bid and ask here is 3 cents. That's it, it's 3 cents. And part of the reason that is because the volume being traded is in the tens of thousands. Okay, that tens of thousands on Friday, 94,000 contracts to be exact, and that represents just thousands and thousands of shares of stock. One of the other reason I recommend is you practice with stocks first is because they're liquid and the spreads are small because there's so many people participating, thousands and thousands of people participating. Options were barely available in the US, right, through LedgerX. They might be available in, other countries, okay? This is a US based deal, so, but they'll pop up. And here's the thing, when's the time to practice something? After it's able to happen, like let's say you got a piano recital that could happen in 6 months. Do you want to wait 6 months to start practicing? Or you want to practice now? So wherever in the world you are, okay, wherever in the world you are, this is most likely going to be available for you to do soon. Practice on stocks now and then start practicing on this later. Now, notice this. Let's go to the options, and the options chain are similar, aren't they? You have a strike price where you strike a deal, you have a date, you have a bid and an ask, right? And you have the same thing over here, right? You have a strike price, okay? You'll have a date, which is here, November 19th, you have a bid and an ask. But look at the difference between Apple right here, their call options at $150 are 3 cents difference, 3 cents difference, okay, at $150. Okay, Bitcoin options, if we look at, let's say, I don't know, right here in, let's just say in November 26th that expire, right here, there it's about 65,000, so let's just go with 70. Difference between that bid and ask is about, what is that, about $200?
Couple $100, yep.
Okay, so look, $200 difference between bid and ask here, Apple, 3 cent difference. You will probably see these narrow over time. Okay, doesn't mean you can't trade them, doesn't mean you can't split the spread and get in the middle. But if I click on this one, there's not the thousands and there's hundreds here. There's hundreds here. Over here, there's thousands. The volume is in the thousands. Okay, over here, we've got a few hundred going on. So I could do thousands of shares of Apple over here at 100, contracts for Bitcoin. And I might do 2 or 3 Bitcoins here, but Bitcoin's a lot more expensive than Apple, right? I mean, $60,000 goes a long way. One of these contracts would be, $600, if that makes sense. But the point is the skills are the same, and that is the value of learning how to do this type of stuff, is because the skills, they're the same. Okay, they are the same. Anything you want to say about that stuff?
Great point. I mean, the skills being the same, if you know how to go and buy some stock and sell a covered call, so you go through and you learn that and you paper trade it, then going and buying some Ethereum or Bitcoin and doing a covered call is going to work the same way. You're going to choose your strike price, you're going to choose your expiration, you're going to choose all those same elements, just like you said. So it's the skills that you're developing. And then again, we can substitute any asset there. It could be stock, it could be crypto, whatever. You now know how to do it.
Yeah, here's a real estate example where this guy buys some real estate, they strike oil and it becomes more valuable for him, right? And then he can sell that contract. Here's a stock example where they buy the stock and it goes down, or they might buy the stock and it goes up and the stock becomes more valuable. So we'll be breaking down all of this stuff in the 4 pillars into, we talked about the ask price and the bid price and the strike price. All of these graphs, whether it's a crypto graph or stock graph, all of the strike price, bid, and ask is going to be broken down for you, so you'll be able to use these skills, really in all the different asset classes, and a lot of different markets we'll be able to play in. So how have we done so far? Well, we've done long stock. I don't know where my list went. We've done long stock. We've done short stock. We've done long call. We've done
Covered calls.
call. Let's do a put.
By the way, you already gave up one of those question marks.
I know we
we already did it. Long call.
Call.
We still have one question mark there.
Long put. We'll even do some bonus ones. So what is a call and a put? A call is the right to buy something. A put is the choice to sell something. And so let's do a short put and show you how this works. Let's just pick one and do one for real. Let's say you think that it's going down before November 26th to $50,000. So I could come out here and I could spend between 173 and 422. So what's the middle of that? Maybe I say I want it for
and
300.
you would be collecting this money. This is an income strategy.
We're actually going to buy a put.
You're doing protective put, not cash.
No, I'm actually going to buy a speculative put. I'm betting that it goes down.
Gotcha. Okay, so we're just betting on it. We're betting on it going lower. Think of this. A good way to think of this is a substitute for shorting the stock, right?
Shorting have the unlimited risk.
Shorting the crypto would be very risky because we'd lose all that it could go up. If I buy a put, I'm limited to what I pay in premium, but I get all the downside if it were to really collapse. So again, this is me. We could do the cash. We could do the same analogy. You're on the cash covered put side, and I'm on the the long put side. I'm the speculator, and you're the one collecting income. It'd be the same concept. I'm going to pay some premium to someone else on the bet that this thing's going to collapse in value, and I'd have a huge payday but a low probability of success.
Now, so Corey and I come together, and Corey's over here and Andy's over here.
I'm not sure why I'm always taking the bad speculative trades.
Well, I live in a dream world where I might be, So let's say, I bid 173 and, someone takes it. And so let's just say it's a premium of 173, just for fun. So Corey says, hey, Andy, I'll give you $173 if you'll make me promise to buy this at 50K. Now, this is pretty cool. This is now an agreement. This is a promise. This is a choice. And another word for guarantee is promise or commitment or agreement or contract, whatever you want to call it. Well, let's say that Bitcoin dies. It just drops like a rock, BTC. And it's here at 65, and it just drops down to like 30 grand, which has happened before, right, guys? I mean, it can go to 16, right? 30 grand. Well, think about this. Corey doesn't own any of it. He has the choice to sell it, but he doesn't own any of it right now. Doesn't own a thing. I promised to buy at 50. Well, think about this. If it is only worth 30, and Corey has a promise to that he can sell it at 50, what could Corey do now? If he has a guaranteed buyer that has to pay him 50 grand and it's already at 30, what could he do? Well, Corey could go out and say, all right, I'll buy here at 30 and watch this. I could sell retroactively. I could sell it at 50 backwards, because even though he's buying at 30 grand a day, before it got there, he already had a buyer at 50. So I have to buy it clear up here, right? And he has the choice to what? Sell at 50K, man. And he's going to make $20,000 off that 173 bucks. That's pretty cool. And if it goes up, all he lost was $173. This is good till November 26th, let's say. Probably not going to fall that far by November 26th. Okay.
I'm going to need the U.S. to outlaw all crypto or something before, I'm going to need something big. But if it were to happen, to your point, because I'm guaranteed to be able to sell at 50, no matter how low it goes, I have this sell ticket, right? I have this ability to sell for 50,000. So I get to brag about that ability to sell at 50,000 only if the price is below it. See, if Bitcoin stays up here at 68, I can't brag that I get to sell it at 50, and everyone's going to be like, well, you idiot, it's worth 68,000 right now. Why would, you being able to sell it for 50, that's no good. But if the price tanked and it went down to 40,000, 30,000, now my option is very valuable because the asset is worth 30 and I have the ability to sell it at 50,000. That piece of paper, that option, that choice is worth 20 grand of value. It has that much intrinsic value in it.
Now, if I think but maybe I want to buy it at 50 anyway, right? If I want to buy it at 50 anyway, I'd have $50,000 of cash in here, and I just received $173 for my trouble. And maybe I was, it's at 65 today. Maybe I think, I think it's going to 100 anyway. I might just stomach this dip and say, yeah, I'm happy to buy 50 grand because I never knew it would get there. Watch, if it goes up, I keep my 173. If it goes sideways, I keep my 173. If it goes down, I keep my 173. And I hope it comes back later, but I get $173 no matter what happens. Now, that's a position we did on Ethereum. Now, I know I'm feeding you from the fire hose. And if someone's saying, oh my gosh, there's a lot to remember. Well, relax, you got 20 hours of 4 pillars to go through first. All we're doing here is showing trades that apply to crypto. That's it. So some of you have gone through your whole 4 pillars and really mastered this on how to do it with stock. And now you're saying, oh my gosh, I can do the same thing with crypto. Some of you might have just barely gotten into the class and said, hey, I want to make money with crypto. And you say, oh my gosh, I can go and learn all these different trades in the 4 pillars. This is what's in front of me. So if you've been through the 4 pillars and all these trades are review, you're like saying, oh my gosh, I can do this with crypto. If you're new to the 4 pillars, you're saying, oh my gosh, this is all I can learn about crypto. So it just depends on where you are in the course right now. If you've already been through the 4 pillars or if you're brand new, either way, you're going to be fine. Both sets of people, the key is completing the 4 pillars of investing. If you complete them, you'll know all these trades. Let's just demonstrate one we did in a webinar not too long ago on Ethereum. And let's just look at my positions on Ethereum. Here we have right here a put. Let's just bring this up where I got paid $400 for a promise to buy at 4,000. So right now Ethereum is at whatever it is, 4,500 or whatever it is.
About 46, 4,700 it looks like up there at the top.
So it's $4,600 is what Ethereum is right now. Well, I didn't want to pay $4,000 for this Ethereum this month. So I said, look, I'll put 4K in cash in my account. Okay, I'll put 4K. Let's get rid of that. 4K in cash in my account, and I want to get some income. So what I did is I said, hey, Corey, you send me $400 and I'll make you a promise to buy if it goes down to 4 grand. Well, it's probably not going to, but now if it goes up, I keep the 4 grand. If it goes sideways, I keep
400. 400.
Excuse me, it's 400. And if it goes down, I keep the 400 plus I'll buy another Ethereum with it. So that's very, very cool. Now, these contracts are not permanent. Right now, this one is going to expire. Today is, what's today?
The 12th, so about 14 days away from, or no, 14th, pardon me. So about 12 days away.
And this is 26, so we're a couple weeks out is all, right? Well, is it really going to lose 10% of its value? Is it going to go down $400, $500 then? Probably not. So if I wanted to, I sold this. If I wanted to get out of this, I could buy to close. And look, they're only going for $70, $80 now. So I could say, hey, I got 10 of these. Maybe I'll sell it for 80. Well, then I give back $80 of my 400 and I keep the other 320 if I want to leave the trade. So you can leave the trade anytime you want. Hey, I'm greedy. I want no skin off my nose to get the whole thing. I don't think it's going to get there. And besides, I'd love to buy some Ethereum if it went all the way down to 4 grand. I'd love to buy some more at 4 grand. So that is called the cash covered put. And the thing that's way cool about that is I get paid. I get income. We got that arrow coming up from the asset column of my cash, getting that premium coming in by simply promising to buy something I was looking to buy anyway. Okay, let's see how everybody's doing. I know it's a lot, but how many are seeing opportunities? Yeah, the Wheel of Fortune, Wheel of Crypto. How many of you guys are seeing how this applies to all the asset classes now, right? All we're doing is showing you how we've taken our 4 pillar skills and we're applying them to crypto. This is kind of interesting. Let's just take a poll. Who has been already through the 4 pillars and has an understanding of these trades is in saying, oh, this is cool. I can take all my investing skills that I have in stocks, real estate, whatever, and now I can apply some of what I've learned to crypto. Who's in that boat? Okay. Okay, so we got a few people in that boat. Very, very, very cool. Okay. Crystal Hahn, mind blown, right? It's kind of cool, right, Crystal? We give her special treatment because I've known her for many, many years, and she's mentored with us for a bit. So now I can use my trading skills with crypto. The other thing that's cool is I could do a protective put. We'll talk about that. Oh, how many of you are new? Okay, how many of you are new to 4 pillars? You're like, oh my gosh, there's a lot for me to learn, but I'm excited that I'm not only going to be able to use these skills for crypto, but I'll be using them for stocks. And here's the ultimate goal, guys, really, in the 4 pillars. It's not just about stocks or real estate or cryptocurrencies or any of those things in isolation. What the 4 pillars of investing is for, okay, is to get yourself a plan. Let's see if I can get this going here. Is to come in and just get yourself an investing plan, or I can find a nice chart to show this on, to where we say, look, I want multiple streams of income in here, right? I would like to do this with real estate. I would like to do this with stocks. I would like to do this with where we have a knowledge of how to do hedges, right? Of how to do capital gain, of how to do cash flow strategies with any of this stuff, right? I have, for me, I have real estate doing this. I have stocks doing this. I have businesses doing this. I have commodities doing this, right? And I have Bitcoins doing this and this. So I can put a check mark, cash flow, cash flow, cash flow, cash flow. I have paper commodities that I'm doing this cash flow, and my money sits in the bank. No cash flow for that. That just sits there, right? But I also cash flow this by selling puts. So I can really say I cash flow there with puts. So really, I can show on my financial statement this month, I can show this, 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 and this. Every single one of these. And I'm not like a billionaire. Don't get the wrong idea. I'm just like you guys. I'm just a guy making it happen. But I would much rather have a little bit of cash coming through all these different things than I would having a job, right? I don't, want to have the job thing going on here. So that's why I thought this would be important, because I think some people say, well, Andy's a paper assets advisor. Not at all. What is rent? Rent is a promise that you can stay in my house for a month. It's a contract. Okay, what is a call? And when I sell a covered call, it's a promise, it's a contract that you could buy my stock if it goes up really high, right? Okay, what is a cash covered put on Ethereum? It's a promise that I'll take my cash and buy Ethereum if it goes down if you give me some money for promising to trade you cash for Ethereum, right? Okay, what is a business? Well, I might have a contract with someone to go do something for them, right? On and on and on. We want cash flow. We want cash flow. We also have hedges. Let's do a hedge on crypto. Let's say that I'm nervous about my house. Okay, let's go back to this right here. Let's put the house in here and say I'm nervous about my house. We'll put the house in there. What would I do if I was scared my house was going to burn down? What would I do? I would buy insurance, right? Yep. Okay, what if I thought my stocks were going to go down? I would buy some puts. What if I thought my currency was going to go down? I might buy some crypto. What if I thought my business was going to burn down or get sued? I would buy some insurance. Gold if I thought cash was going down. So let's do a crypto trade, and people lose their minds over crypto because of the downside, right? They freak out over the downside. So let's do our protective put, and let's pretend that I have some Bitcoin in here. AL, Bitcoin, IE, okay? And I have a Bitcoin in here. Well, I paid for the last Bitcoin I bought in here, I paid 55,000 for it. So we're up 10 grand, great. But this, if I look at the chart, Corey, if I look at the chart, my gosh, you know, there's a lot of risk in this, man. Don't you agree? That
Oh yeah,
Bitcoin
very volatile.
You know, I mean, look down here. It wasn't too long ago at 2020. This thing's at 15,000, and you know, if it falls to support here, that's 40,000. If it falls support here, so I look at this and I say, you know, maybe you want to draw a line in the sand and say, I don't want to give it back up to here if it goes down this far. Like, look at what happened in this time period there. See that? That could happen again, right? We're right up at the top where we were before. This could happen again. And look, it can happen in just a couple of months. It can happen in 2 months. It could be from here down to here in 2 months. So maybe, in fact, that's even like closer to a month, right? April to, like, let me get that right on.
You can see those, look at those big red candles. I mean, right there at the end, it was falling 20,000. Yeah. 20,000 in just a few days, you know. That's
brutal.
So that's where my buying a put would have paid off, right? As if I was speculating, or I could buy a put. I could buy a put for two reasons. One is just to speculate. I don't own the asset. I'm just betting on it going down. Two, I could go buy that put if I did own the asset, so that in case my asset went way down in value, that contract that I owned would go way up in value. That's the hedge aspect of it.
So maybe what I do is I have my Bitcoin here, but I also buy a put option on my Bitcoin to say, look, if the Bitcoin goes down, the put option would go up, right? And so I want both of them to balance that. I want both of them in there. If the Bitcoin goes down, that sucks. So this is called a protective put. I'm gonna buy a put not for income or hoping I make money on it. I'm buying it for protection. And we do this with stocks all the time. So if you have a 401k, you can learn this to do this and protect a 401k with offsetting assets. So let's say I wanted to protect this down to, let's do Bitcoin again. And let's say, you know, let's look at December and say, look, I want to protect this down to 40 grand, okay? Or 30 is where it went, you know, down there. $289 for 2 months of insurance. $700 to protect it at 40. It's at 55 now, $2 grand to protect it. Now think about that. I think it's going to 100,000 because I'm one of these nutty people that thinks it's going to 100 grand this month in like 2 weeks. Okay, great. Then spend 2,000 after you buy it, and now you're locked in at 50, and that's the most you could lose, right? Because you have the right to sell at 50,000 no matter how far down it goes. So essentially, you take this at 50 grand and say, look, I'm going to draw on the line in the sand right here at this old resistance and this support. That's the second pillar, technical analysis. I say, look, I'm drawing the line in the sand there. If it goes below that, then I have a guaranteed sell. And if we get this nasty stuff in a short amount of time, I'm good. I'm good. So that's the protective put. So let's see how we're doing on all our stuff. I think we've almost got them all. We got to do the caller trade.
Yeah, and I would just add one thing to that naked put, where you said if the Bitcoin goes down, the put goes up. That would give us the right to sell the Bitcoin, but maybe we don't even want to sell it, right? Maybe we just want to sell that put back to the market, which in essence just paid us back cash flow. So our protection went up in value. You know, we had planned on it, probably was going to be a waste of money, but if it has a big payoff, maybe we decide after Bitcoin's taken a big nosedive, okay, well, we'll sell our put back to the market, lock in profits on it, and then just ride our Bitcoin back up. So we don't have to get rid of our Bitcoin because we have that insurance. We can basically just take profits on that protection. Kind of cool.
I can't even give this thing because it's killing me. It's hilarious, okay? Do you guys want to see an example of what Corey just talked about? I've never done it in Bitcoin because I haven't had a big crash in this Bitcoin yet, but I could show you on a different one what I did. When, let's look at ExxonMobil. I did this on ExxonMobil. Let's go back in time a little bit. And back, but it works for what Corey just said. Let's go back like 10 years, okay? So I was looking at support around, 60, 50, something like that. And I said, if I can buy oil at like $50 or something like that, I can't remember what it was. I'm like, I would be stoked. And so even though it was in a downturn, I'm like, man, that's cheap oil, man. You buy ExxonMobil, that's cheap. You got a dividend every year for the last 37 years. The dividend keeps going up. The price is down and the dividend's up. That gets sexy. Well, I didn't know we were going to have coronavirus right here, in March and get destroyed. So I actually bought some puts right here, and I got paid about, I don't know, I want to say maybe $4 or $5 grand, $6 grand per contract I had on there. And it just fell to pieces. I didn't sell my ExxonMobil, but I did sell my puts. So I took the cash, and then I've just let it come right back up, and I still got all those shares of ExxonMobil today. So it's as if I was just fine, but I got paid to endure that dip. I got paid for it. Where if I didn't have the put, I'd just been holding steady and I'd be right where I was a year, 2 years ago. Instead, I got paid I think it was, I don't hold me to it. God, I don't remember, but it was like maybe $4,000 per contract or whatever. I can't remember what it was. Don't hold me to that. But that's what I did. It's a long time ago. Very cool stuff. Now, the caller, last trade we're going to do, and then we're going to talk about one last thing and we'll be done. That's pretty good for an hour and 45 minutes. It's not too bad.
Not bad.
Okay. Very, very cool. I could do this if I wanted. Let's say that we took you want to do Bitcoin maybe? Let's do Bitcoin.
Yeah.
So right here.
What's interesting about the caller before you get started is we've already taught the caller. We just haven't pieced them together, have we? So now we're going to put two options together. We're going to buy the protection, sell the covered call. We're going to collar this up. So go ahead.
So back here on October 6th, you see this 6th at 416, that's all the same time, isn't it? Well, it's because they execute these in milliseconds or whatever. So I got different prices on my 100 contracts. This one got filled at $55,157, $55,160, so $3 more. $55,163, so $3 more. So when people say, where's your Bitcoin price? About $55,100, and 60, somewhere around in there is where I got it at. Okay. Then what I did is the next one this is an Ethereum. So after I bought these, the next one I did is on October 19th. So about 2 weeks later, I said, you know what? I'm willing to sell my Bitcoin that I bought at 55. I'm willing to sell it at 80 grand. Okay. And you're going to pay me $2,300 for it. So let's show what this looks like. Okay. Over here, we're going to do a collar. So let's get this out of here. So
far you're doing the covered call part.
Yep, is I got one Bitcoin, BTC, like this, and I paid 55K for it. Okay, we'll just call it 55, 100, whatever, 160, whatever it was. And there's my asset, and there's my liability, income and expense. So that was the first trade, which was right there on October 6th. Okay, the next trade that comes in is I make $2,300. And by the way, this is pretty cool if you're a real estate investor. Because if I were to buy a house and put $55,000 down, that's probably about a $220,000 house, because I could leverage the other 200 and whatever. What let's do. What would that be if it's 25? Yeah, I could leverage the other 170 or whatever. I can't do the math in my head. What would a mortgage be?
You would basically do a mortgage. Say you put 55 down and you took a $200,000 loan from the bank.
Something like that. And so then I'd have a payment And if I got $2,300 a month in rent, well, I'd have to have a payment. I might cash flow $500 of it. Here, because I didn't use any debt, I get to keep the whole $2,300. So for a real estate investor, if you can put 55 grand down on a house and get 23 cash flow, not rent, but actually after that's pretty good numbers. I don't think I can sustain that every month, but it happened this month. So that's cool. So on November 26th, when this expires, that goes. Now, here's what's interesting. What if I'm nervous and I want to lock in some gains? And what if I want to protect it to say, look, I paid $55,000 for this. I just made 23. What if I want to guarantee, a freaking guarantee, that I don't lose this 55 grand during this time? Well, let's go back to our put options. And I say, let's see if I can get this back to our put options. And I say, hey, for November 26th, same time, I want to lock in, let's say, 50 grand. Okay, they don't have a 55 strike. So I say, I only want to risk $5,000. I can insure this for the next 2 weeks. For the second half of the time I own this, I'm not going to, because I'm not worried about it. I don't think it's going to burn down that far. But for about $300, would you say, between the spread, somewhere between
bid-ask spread, right around $300.
Yeah, for $300, so I could take this 300 right here that I got off the 2,000. I could take 300 of that, and I say, let's buy a put. Let's buy a put right here. You know, for $300. Now I got $2 grand in here instead. Net. Let's buy a put that gives me a guarantee that I can at least sell that at 50, and the most I could ever lose is $5 grand. So now I got insurance. So now I'm getting all the upside. Bitcoin. Now watch what this does. Okay, let's move this over, and I'll show you what this trade would do. Okay, this is and this is all in the 4 pillars. If you study your 4 pillars, all these skills shall be yours. At least the knowledge will be. So watch. I'm at 55,000 is where I got in at, right? I now know that if I buy this at 55,000, let's say right here, it could go down in a scenario, right? And let me redraw that. That's a crappy graph. Can I get all that out of there? Probably not. Come on, give me one more. It's not going to happen. That's all right.
Hey, Andy, you could do it like this. You could say your max risk now is $3 grand. So you could put you could do
so watch this. I want to show it. I want to show it like this. Like, let's say here I am, and it goes down to 0. So if it goes down to 0, I'd lose what? 55K if it goes down to 0. Okay. Now, if it goes up to 80, that'd be cool, because 55 to 80 is 25 grand plus the 2,000 is I'll make $27,000 this month if it hits 80 grand. And it's sitting right now at what, 65? So it's probably not going to get there. But if it did, I'd make 27 grand. I'd make the 25 between 55 and 80 plus the 2,000. So I'm pretty happy there. But so this would make me extremely happy. I'd be thrilled if I get called out, and I'll just sell a naked or sell a cash covered put to get back in. So like Chris Christian said, wheel of crypto, right? Same as the wheel of fortune, same thing. But what I'm worried about is its downside. So what I did is I say, yeah, but I have the right to sell it at 50, right? So what I'm going to do is if I sell it at 50.
But remember, you brought in the $2 grand premium still.
Right. If I sell at 50, now the most I can lose is 5,000 minus 2, which is 3K. So my upside in this trade right now is 27,000, the upside. My downside in this trade right now, if I did it, would only be 3K. I don't think it's going to go down there. I'm not even going to buy the insurance for 300 because I don't care. I'm going to keep the extra $300 and go supersize my meal and drive-through. But I could do it if I wanted. That gives me a $27,000 upside and only a $3,000 downside in something that could get cut in half or go down in a very volatile asset. So what this does is reduce my risk, give me cash flow, and preserve my upside, which is what, what's crazy about that, Corey? What's crazy about that last caller trade is it touches every one of these.
So many of those, yep.
What it does is it gives me, like if I replace with this crypto, it gives me premium from selling it.
2,000 in income. Yep.
$2,300 in income.
Well, it was 2,000 because you bought the protection, right?
Yeah, I'll get it off in a minute. And then what I did here is I bought it 55 and I sell 80. So there's my capital gain. And then what I did is I took $300 here and I bought an option contract that will go up if the Bitcoin goes down to preserve this 55 grand in here. Worst it can get is 53. Check mark, check mark, checkmate. That is a trade called a caller on a very aggressive investment called Bitcoin. So take your classes if you're new. Remember, you say, wow, that was a lot. Well, look at all the stuff you got to go learn. If you've already taken it, then take it again. Okay, take it again. And it's pretty fun stuff. Okay, who enjoyed the class so far? We got one more little bonus for you in the last 10 minutes. We got one more bonus, and we'll have a nice 2-hour insert into the 4 pillars of investing. Did you like it so far? Very cool. We got good comments coming in. We like it. Okay, now I'm going to show you a Corey Genius trade. And this is sort of fun. I don't know where our numbers are on this. We've been doing this in the Mentor Club with Noah, though. Noah, the genius. And this is way fun. Is one of the things that Buffett bought, and then he sold it. He didn't stay in it. But Buffett was worried about the dollar maybe. And if you buy gold, it's just going to go up or down. There's no cash flow to it. But if you buy Barrick Gold, the mining company, you buy Gold Mine, here you just buy the brick. Here you buy the gold, all of the potential gold you now own that's in the mine, and as they mine it and sell it, you get the dividend. So if all of a sudden the dollar crashed and gold went down, or excuse me, and gold went up, you have a gold mine. You're literally sitting on a gold mine at that point, and all that potential of go dig faster. Go dig faster, and your dividend would go through the roof. So he turned a hedge into a cash flow by thinking 3-dimensionally. Rather than thinking about gold, think about a what? A company. Now, I'm going to tell you what Warren Buffett said about gold, and I'm going to draw a picture of this because I think it's pretty funny. I have a visual on this somewhere. But here, what is a gold mine? Well, a gold mine is a hole that we dig, and in the bottom of the gold mine, there's gold nuggets like this, okay? And that's called a gold mine. And what we do is we put a security guard there in the daytime so people don't come in and mine the gold, okay? Then what we do is we dig it out and refine it, and we put it in another hole. So this is called a mine, right? This is called a mine. And this is called Fort Knox. And Fort Knox, if you ever drive by it, they don't give tours. I don't know how to spell Fort Knox. What they do is they pull this out and they spend some money on it to put it into nice, neat gold bars. And then they put it back in the ground and they hire another group of security guards to guard that. And Warren Buffett said, you know, if you looked at that from Mars, if you are Mars and stand on Mars, you say, okay, wait a minute. They dig a hole, pull it out, and put it back in a hole, and they guard both of them. There you go. There's gold. There's gold. And he says, the reason I buy companies is companies produce things. If you look at Coca-Cola, you know, they have a factory and they sell these cans of Coke and people get a Coke and a smile. And there's a result of that, and they say they make money more and more and more by selling Coke. And so we thought 3-dimensionally from this example of Barrick Gold, and Corey said, look, if you have a 401k, watch this, if you have a 401k, and that's the retirement plan in my home country, the United States, watch this, if you have a 401k, what you're doing is you're buying stocks, basically, stocks and bonds in mutual funds, and you're hoping they go up and you're scared they'll go down. And what you do is you pay fees to Wall Street to watch it go up and down for you. So that's one side of the coin, okay? The other side of the coin is Wall Street. Okay? Wall Street. And what Wall Street does is they're the ones that collect the fees by putting your money in these things that go up and down. So if they go up, they get their fees, and if it goes down, they get their fees. So if you have the choice, okay, to be the 401k or Wall Street, well, where's the risk? The risk is on this side of the stocks and bonds going down, right? But fees are just fees. So this should be a pretty easy question. If you had your choice as investor to position yourself as the 401k where you get all the risk and maybe a little reward, or you take no risk and everything is reward, which one would you choose? And so we had two ideas here. We said, don't buy gold, buy the Barrick Gold Mine, which he sold for whatever reason. And then we have another idea that says, well, don't do the 401k, be Wall Street, collect fees. And Corey calls me a few months ago, I can't remember what it is, and he said, hey, Andy, you know the Barrick trade where Buffett bought gold? Instead of buying gold, he bought the gold mine so he could get the dividend by being in the gold business, where he wasn't just digging a hole to put it in another hole and hold it? I said, yeah. And he goes, and you know how like the brokerages charge fees for the 401k stuff? I said, yeah. He goes, what if we combine these two things together? What if we were combining these two things together and thought about this three-dimensionally? I says, what do you mean? So tell them what you told me, Corey, about what your idea was to make money on crypto without having to buy crypto. In other words, are these people making fees because they're buying stocks or because they're in the brokerage business? Right?
Yeah, and it was kind of along those same lines of, you know, in the gold rush down in California, who made all the money? The people that went searching for the gold and that euphoria, or the people selling shovels? And so I said, look, crypto, you know, it could be a good investment, and we could look at that, but we could also look at who's making money off of crypto. And it just so happens that the biggest market maker, the biggest broker, happens to be the same company called Coinbase. So Coinbase is going to make money off of all these fees. And if you think the popularity is going to continue to go up, then Coinbase could be really interesting, because now we don't need Bitcoin or Ethereum or any of these to go up in value. We just need there to be interest in it. And as long as there's interest and growth, then Coinbase is going to be a beneficiary of that. And so that was kind of the ideas. Same as Buffett's philosophy. Yep.
So Bitcoin is really about the direction of Bitcoin, but Coinbase is about the number of people that are going to start opening wallets and using and trading Bitcoin. So if you think, I don't know if I want the volatility of Bitcoin, you buy Coinbase, and if the popularity of Bitcoin goes up, remember America Online when it came out? If you wanted to get on the internet, that's kind of where you went, because they were the first ones in a new craze or trend. Now America Online isn't around that much anymore. They're still around, but they're not as cool.
And Coinbase might not be around 20 years from now, but we don't necessarily need them.
By the way, Q, you know, Sherry is our compliance officer. Cue Sherry at this point, right, Sherry? Sherry's like, Andy, your timing's perfect. We don't make recommendations, okay? This is an illustration. We're not recommending this. We really aren't. But what's interesting is this is kind of like Buffett's thinking three-dimensionally. It's like, if I don't want to risk the Bitcoin by going up and down, but I feel it's a trend, it's a big thing, maybe I buy Coinbase. Now, let me show you what we've done in the Mentor Club. So we took these skills, and this is getting a little complex, but it's still fun to do. So guess what we did in the Mentor Club? We had some cash, and we said, let's sell some puts, where we buy Coinbase cheap. That gives us income selling puts. So this month, let's look at our Coinbase in the Mentor Club. Okay, watch this. This is, let's analyze our Coinbase trade, C-O-I-N. No, say, what the heck you doing in my Mentor Club? Leave me alone. So we've got all these trades on Coinbase, and these are more elaborate than the ones we talked about. You know, we have some cool stuff. He's going to kill me. He's like, don't take away all my cool stuff that I'm doing. So here's a Coinbase trade, and you'll see we've got what's called a long straddle on this right now, where
short straddle.
Excuse me, yeah, short straddle. Oops, thank you, Corey. See, that's why Corey's here. I get my stuff. We got a short straddle because we're short. We're minus on this stuff, and we brought in $820. Right now we're up 600, and if we want to get out of it, and we've got a promise to what? To put, if you sell a put, we're promising to buy this at $290. Well, it's at $300. So look, if it goes down to $290, we're going to go ahead and buy it if it gets cheap. Well, we like that idea, and we said, hey, if it goes up here, we'll be in trouble. We have risk. But watch this. What we basically did with Coinbase is we did this short strangle. And let's look at the chart. What I'm going to do, hang on, let me go back to this, is I'm going to set these slices here. And I'm going to set these slices to break even, like that. And then I'm going to set the slices to the chart, like that. And now I've got these slices, and I need to get rid of this one. Remove drawing, and let's do this right. Let's analyze this again and make sure I set the slices to the chart properly, because I don't want to do this wrong, because it's going to be evergreen. So bam. Okay, there it is. Now look. What that means is, this is such a cool trade. So what that means is we have a range here, and on expiration is when? November 19th, so November 20th. What's that saying? 93% right now that we're going to make money in this? 93%?
99, it looks like.
I can't see. I have my glasses on. I'm trading blind. Never trade without your reading glasses on when you're over 50. Good advice, good counsel. This is the cone where we think it'll probably be, and this expires in November 20th. So it's probably going to wind up in here somewhere. And we're just saying, look, if it goes down here, we'll buy it. And if it goes up here, we'll sell it. We don't own it yet, so this is the riskier part of it. But we're bringing in $800, $820 with the trade. Now, we've been doing this for a while. Now, notice this. This is $350. Well, if you look at our history on Coinbase since we started doing this, we've been doing it over and over. We brought in $2,445 doing the same thing over and over and over a month. Guess what we can do with that $2,445? We could start buying Bitcoins with it, or we could start buying more Coinbase with it and reduce our cost basis. So, you know, that's really cool. Now, let's think three-dimensionally. If you decide to get rid of a paper currency and you decide to go to a cryptocurrency like Bitcoin, okay? This, if I have this, I might go into the purse business, okay, because you need a place to keep that, or I might go into the wallet business because you need a place to keep this, you know, George Washington, you know, greenback. If I trade Bitcoin, I need Coinbase. I need a place to put it virtually in a digital wallet, right? But I also need Verizon Wireless because that's how I trade. Oh, I also need a phone with Apple. So I actually have interests, personally, you don't have to. I have interest in some of these companies right here, or maybe AT&T. Because if you get rid of this, now you become dependent on computers and phones. It's worthless without a connection and an internet to go and a wireless. And you've got to have these. These become essential businesses if you go to a paperless Bitcoin society. So think three-dimensionally about using the 4 pillars for crypto, because now what do I want to do on all these companies? Well, maybe you do a fundamental analysis on them. And maybe you do a technical analysis on them. And maybe you decide, how would I position myself for cash flow on these? And if they go down and this is wrong, how do I manage the risk? Well, that's 4 pillars of investing that can take you beyond this and into this. Guys, the 4 pillars have served me well. There's no perfect investing system. There just isn't. But I'll tell you, I'm so proud of the people that have taught this with me, like Corey and Noah over the years. And I'm like ultra ridiculous proud of the students. Get a better 4 pillars up there. It looks a little nicer. I'm ultra proud of the students that have taken this class, because I believe these principles really can be life-changing if people follow them. And so I think this little crypto class of teaching these trades as examples of how you can use what's taught in the 4 pillars to your benefit can be translated into crypto. And with so much talk on crypto, I thought it'd be cool to do. So what do you guys think of the class? Is this cool? No, Steve, they're different companies. Okay, pretty good stuff. Way fun stuff. And every once in a while we do, you know, roundtables and invite you in. You know, we've done a lot of videos on gold, or, you know, we have a series we've put out on the Fed. And these are all things we give you because we love you. So there you go. And that's it. Now, one thing, if you're new, people say, if I'd like some help with this, take Corey's coaching program, okay? It's not a sales pitch. We won't even give you a price on or anything like that. But if you want more help with this, check out, there's an 8-minute, if you want it, we won't do a sales pitch tonight, but if you'd like to see a sales pitch on our coaching program, it's 8 minutes long. It's pretty straightforward. Go to 4pillarscoachingprogram.com and you can actually learn how to get help with this. And Corey, I don't know how much crypto you plan on doing, but if someone had a question about doing this, would that be cool? Is that allowed in your?
Yeah, absolutely. Yeah, and like we talked about, I mean, these things are interchangeable. So we can pull up covered calls on crypto, we can do cash covered puts, we can do any strategy like that on various assets. And in the coaching program, it's really designed to make sure that you're using these things, you're understanding them, you're going through your paper trading, and you know, it's just a lot of fun. The feedback we've gotten has just been phenomenal. So I think you'll love it.
Chris Richards says, you could use all this money to buy the 4 pillars, get infinite return. Thanks for the pitch, Chris. And
love it.
Crystal has Crystal's like, she loves us. So, you know, whatever we do, she gives us love. So that's kind of not fair, but it's fun to see it. And we've given her a couple of shout outs. Well, she's been with us for so long, and she's a doer, man. She is legit. So great. We get lots of shout outs to Crystal on our evergreen webinar. That's awesome. No one would deserve it more. Any final thoughts, Corey, on this? I mean, did we take care of business? I think we did.
I think so. We hit actually some bonus strategies.
Yeah.
You know, we showed, and it was really cool to end on the caller where we showed the combination of the covered call and then buying a protective put to collar up your trade. So you had limited risk, limited reward, but that reward was so much larger than the risk. Just a lot of fun. And all of those different strategies can be utilized on stock to generate cash flow, to offer protection, but they can be used in a variety of different asset classes. Yeah. So we'll kind of rewind back to where we started, which is we emphasize education. Education is going to take your levels of risk down. It's going to help you to go to that next level. So the understanding of how to analyze it, how to protect yourself when needed, how to cash flow it, assets, it's just critical to long-term success.
So bottom line is, if you're a 4-pillar student that's gone through this, and you know, you have lifetime access to it. So if you're already in the 4 pillars, go back and review some of this stuff. Say, you know, I'm going to brush up. If you want to start messing with crypto, there might be something in there that might help you reduce your risk or cash flow it, or, you know, be of some assistance with the team or your advisors or whatever you're using. If you're brand new and you say, yeah, man, I just got in the 4 pillars yesterday and I want to see, you know, I'm really interested in crypto. Okay, take your 4 pillars, learn how to do it in stock first with small spreads, high liquidity, in a paper trade account. The reason that I had a nice little example for us with crypto and Ethereum, part of it has just gone in the right direction for me. So that insurance got cheaper. You're probably not going to get a 27,000 to 2,000, but it'll still be cool, right? It's still going to be cool. And it gives you options. I hate using that pun, man. It gives you options if you have choices, right? And so if you're brand new, and then also, you know, a nice little quick plug for Corey. Not real much of a sales pitch today, more information, but always nice to remind people that Corey has a team of teachers, and they are pretty solid mentors. You know, we have a lot of positive feedback from Corey's team. So with that, we tell you that we love you and we appreciate you. And if you have questions, use your support, send your email. And with that, keep on going. And as always, we will see you on the inside.